Good afternoon, everybody. Brian Farr here, one of the many analysts here at Stock Dads. Hope everyone's having a good weekend. Happy Sunday, and most importantly, happy Mother's Day to all of the mothers out there. Hope everyone's doing well and just enjoying themselves on this nice weekend. Or if you're like me, it's just been raining all weekend and it's just been kind of bleh. But hey, at least that gives us time to do some indoor housework and all that fun stuff. But anyway, it's that time of the day where it is appropriate for us to take a look at the week ahead, as we got a lot of stuff on the economic calendar. We got a bunch of earnings on board, and we really want to take this time to take a look at the broader market and dive in, see what's going on, what kind of setups that I myself might be looking at, or maybe something that you might be looking at as well. So let's go ahead and dive into that. But first, I want to start out by looking at the FOMC meeting that we just had last week. And this is the FOMC statement. And the key thing here that was most debated on, especially when the statement was released, we had a nice little sharp move to the downside, and we pretty much recovered that once Powell started to elaborate a little bit more. And the key thing that I want to highlight here is that they are judging that the risk of higher unemployment and higher inflation have risen. Now, that kind of spooked the market just a little bit, because some people were interpreting that we are getting higher unemployment and higher inflation, aka we're having stagflation, and that word was pushed around not only in our server but as well as social media. But Powell was like, slow down, that's not exactly the case. They're saying that because of all the recent tariff hikes and reciprocal tariffs, that poses certain risk of higher employment and higher inflation. But as it sits, the data pretty much remains steady. Unemployment remains pretty stable. Job growth is still there. Wages are still pretty robust. And overall, the economy is still holding strong, despite the tariff war, tariff battle, whatever you want to call it, is going on right now. So that is the key thing that we want to point out, and we're going to have to monitor the data as it comes in. And you can follow along with me in the Stock Dad server or on social medias or wherever. But yeah, we're just going to have to follow that data, especially the jobs, especially the CPI. We got CPI coming in next week, which will go ahead and jump into the economic calendar for next week. We have CPI and core CPI all on Tuesday, and everybody is going to be watching that very, very closely. And, that is something that we need to pay attention to, because if inflation is starting to rise, maybe there could be that issue of stagflation that we definitely want to avoid. The Fed definitely does not want to raise rates, and that would also be a bad thing for President Trump, who's been fighting for a decrease in rates, which we've seen the Eurozone and everybody else pretty much lower their rates, but the U.S. and Jerome Powell, they have yet to do so. But like I said, the core CPI is a measurement of inflation, excluding food and energy, and all these data points that you see in front of us are going to be very important news making moves in the pre-market session at 8:30. And as far as the CPI goes, that's more of a broad measurement. If it comes in higher, that's definitely a no-no. We want to avoid that. We are expecting that CPI is going to come in at 2.4% and pretty much stay unchanged. So yeah, pay attention to that on Tuesday. Monday, we don't have anything going on, so that's good. We start out the week slow. Tuesday, that's when we get our CPI. Wednesday, we get a little bit of a break, and then Thursday, we get our PPI, which is our producer side of inflation, and we definitely want to pay attention to that, as well as core retail sales, we want to make sure that basically consumers are out there spending, and a healthy consumer is definitely a key driver of the U.S. economy. So no doubt about that. That is going to be a key mover as well. And then on Thursday, before the market opens, Fed Chairman Powell is speaking. That's going to be all eyes and ears on him. And then we close out the week with the University of Michigan Consumer Sentiment and Inflation. Pretty much this is just a measurement of how well consumers are feeling about the economy, how well they are feeling about inflation, and that could fuel concerns about future monetary policy moving forward. All right. So that's it on the economic calendar. It's going to be a juicy week with all the inflation data. Now, when it comes to the fear and greed index, we are at 62. We started the week out at about 61. And yeah, a month ago, we were at extreme fear at 12. We have made substantial strides, or might I say, the bulls have made substantial strides in recovering. There's been some short covering. Maybe they've been selling volatility, which we'll get into in a second. So all in all, we're back at greed. We're not quite there at extreme greed, but you know what? We're at a very interesting part in the market. Fortunately for us, though, we do not have any major earnings coming up this week. Now, we do have, of course, some juicy earnings, and I thought I had that saved, but I guess I do not. Pulled up. Let me see if I can pull it up real quick for you, just so you can have it here on the board. There are a few names that I am watching, most notably Walmart and Baba. Here we go. On Thursday before the open, you got Baba, you got Walmart, and you also have John Deere. Everybody's been talking about China names, especially with this trade war going on, and when a deal is going to be made. How is Baba going to be well positioned? Walmart, of course, is a key U.S. retailer. We'll see how U.S. consumers are spending. And then John Deere Tractor Supply, they provide tractors and farming equipment. We'll see what their earnings are looking like. But all in all, those are pretty much the main three that I'm looking at. Let me know what you are looking at. I know some guys were asking about Cooler, which reports Thursday after close. If you are, an ape and you've been paying attention to the whole Hertz situation, that is coming out Monday after close. So yeah, there's some interesting ones, but there is no main market drivers such as Apple or Google. Pretty much all the Magnificent Seven names have been taken care of, except for NVIDIA, who doesn't report for another 2 weeks. So all in all, some interesting names out there, some retail. We'll see what happens. But all right, let's get into the nitty gritty, which is, of course, everybody's favorite, the charts. Let's get into the charts. And before we get started, let me just go ahead and highlight to you what I'm looking at my screen, or on my screen, to say the least. We have RSI at the top. Everybody uses RSI. You should be well-versed in that at this point. We also have the TTM squeeze, which is a volatility measurement. It combines Bollinger Bands and Keltner channels. When the Bollinger Bands go within the Keltner channels, that is a volatility squeeze. It's not like a short squeeze like you would hear with like GameStop or AMC or Hertz even. This is a volatility squeeze indicator based on Bollinger Bands and Keltner channels. And then below that, we have our moving average convergence divergence, our MACD line, which is a measurement, gives us a measurement of momentum. And then on the screen here, this gray line, I want to highlight that is our daily 200. This like mint green is a daily 21 EMA, and the yellow line here is our 50 simple moving average. So I just want to go ahead and clear that up so you know what's going on or what I'm referencing to. I'll try to point it out as I move along. Starting out with the key ETFs, we always want to start at the top, work our way to the bottom, and then expand out from there. Look at the sectors, some of the peripherals. And then we can look at the individual names. We basically want to try to look for any signs of relative strength, relative weaknesses. Are there any warning flags out there for bulls? Any warning flags out there for bears? What's going on? And then from there, we can, gather a good thesis to have at the week ahead. So let's get into it. The indices are pretty much poised. It's like they're right there to expand outward, but it's untriggered. We haven't gotten that trigger just yet, and that's a little bit frustrating, especially if you are a market bull. We've had some substantial strides here from the lows at about 480 on the SPY. We're currently trading at about 560. Yeah, we've had a great move these past few weeks, and now we've just pretty much kind of stalled out here at the daily 200 simple moving average. And that is going to be the key and is pretty darn evident, especially when we switch over to the QQQ. We've been fighting with the daily 200 for the past, week or so. RSI still looks pretty positive here at 59. MACD has crossed the 0 line and looks pretty healthy. The squeeze has triggered to the upside, and we're just looking for continuation and for signals for that continuation to push higher. If we look at some of these smaller time frames, such as the hourly or the 30-minute, we can see that some of that momentum has pretty much stalled. On the right-hand side is the 30-minute. The second chart here is the 1 hour. This chart here is your 4 hour, and here is your 1 day chart here. So we got a nice little grid here. Everything has the same indicators that we can all reference. But here's the thing. We're at the daily 200 simple moving average here on the Qs. We can see that MACD has started to cross lower on the 4 hour. We also have a little bit of divergence here on the MACD on the 1 hour, something to take note of, where we made a high and then a higher high on price, but we have made a high and followed by a lower high on the MACD. So that is a little concerning. The momentum seems to have faded out a little bit. We can also confirm that with RSI. RSI is pretty much sitting near that 50 line on both the hourly and the 30-minute. It's like the market is just kind of waiting and trying to pick a side. Are the bulls going to take over, break through that daily 200 wall, or are we going to reject from here and move on down? Now, I've heard case arguments that this could be in fact a inverse head and shoulder, where you have the left shoulder, there's your head, and here's kind of your right shoulder. We could come down and then break through from there, and we have ourselves a nice bullish reversal, and off we go. But that is all speculation. We simply just do not know as of yet. So with that in mind, now that we've gotten the key ETFs, especially the SPY and the Qs, those are the main drivers. If we look at the Dow, we can see they're also trading near that daily 200, and the IWM, which is more susceptible to interest rates and all that, they are still well below their daily 200 and definitely not as bullish as like the QQQ. The QQQ definitely leads the way and has the potential to break further, especially when we look at some of these individual names here in just a second. But moving on, when it comes to individual sectors, what we're looking for is basically relative strength. What looks good, what doesn't look good, and I'm going to give you a few of my favorite looking sectors here, and starting off with the financial sector. And you know what, we did pretty well here in Stocktas with Charles Schwab breaking out into highs here at the 84 mark, taking a little bit of a pause. RSI is getting a little heated. However, within the XLF itself looks pretty positive. RSI is at about 60. MACD is crossing to the upside. We also have a 30-minute squeeze setting up, and maybe we can get a nice little move here. You also got names like JP Morgan, who is looking to also make a move pretty much above this 257 mark. If we get above 257, I'm looking for a move towards 264. The next sector that we want to talk about is definitely the industrials. Most of the industrial names are going to be like your Dow Jones components, especially names like Boeing. Boeing is looking pretty interesting. We need to get a break above this 196 mark. And if we get above 196, sure, we can get a ride to about 205. And the key thing here with Boeing is it's very news driven. I know a lot of traders, they have pretty much a love-hate relationship with this name. Me in particular, sometimes I do really well with Boeing, sometimes not so much. It's very, very kind of wacky. But if you're just playing shares, of course you can be more comfortable. But if you're playing options, you definitely want to be mindful about the options contract you're playing. Maybe even do spreads. However you want to tackle this, there are multiple ways. But as it sits, Boeing had a pretty nice run on Friday, Thursday and Friday. Really, we got that continuation on Friday. Thursday, it had news that that the UK was going to buy $10 billion worth of Boeing planes. So that sent the stock higher. And this is definitely, a very tariff news related name that you got to be mindful of. Remember China, when all the tariff situation started, China was like, you know what, we're just not going to buy your Boeing planes, and they sent them all back. So yeah, you just got to be mindful about what's going on in the news world out there. But Boeing is definitely on the radar for next week. This especially with the industrials. As far as everything else goes, the main sector that really looks ugly here is healthcare. Healthcare has been beaten to a pulp and has yet to really reclaim a bid, and you can see that in names such as Merck, who continues to move lower. It has yet to break back above the daily 50 simple moving average. As you can see, this trend is just lower highs, lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. It is strictly a downtrend. It's in this downward channel. And one of my favorite XLV names is Amgen. If we can pull this up, it had a nice little close here on Friday, breaking below 265. Now, I am expecting this thing to move all the way back down to about the 260 mark, giving us a 5-point move. It does have an ex-dividend coming up, but you know what? The setup is there. It's looking pretty good for some downside potential. All right, XLV looks like a bad one. There is an interesting sector that I am keeping my eye on that is outside of like the tech names and the Mag 7, and that is the energy sector. We know that crude oil has pretty much been beaten to a pulp. We can change this to a weekly chart and pretty much see that, we've had a series of lower highs, lower lows. But if we start to pull up the smaller time frames here, especially the 30-minute chart, we can see that we are actually in a spot where we are making, there's your low, and there's a higher low, and this is what appears to be a higher low. Here's your high, and here's a higher high. So as it sits right now, crude oil is getting a little bit interesting, a nice little bounce, which brings me to keep an eye on anything energy related. I'm talking about, let's keep an eye on Oxy. It pretty much has that same little vibe here on the 30-minute chart. We did get a nice little breakout on Friday, broke out above 41, hit 42. There's a small gap to fill towards 43. We can also keep an eye on names like PSX, which is holding onto its daily 200. And if we look here on the 30-minute and on the hourly, we can see that MACD is starting to curl up. Chevron also looks pretty good as well as far as that aspect goes. If we can look here at the 30-minute chart, we can see that that MACD is over the zero line, and the RSI is above 50. We just got to get that move above 140 for the most part. So energy looks pretty good. We're looking pretty good here on semiconductors. Broadcom is one of those semiconductor names that we are keeping an eye on. In fact, I have a position here on Broadcom for June calls, just looking for a move towards 219, 220. So yeah, that's going to be a key moment there. If we can get above 220, that opens up the door to like 238. So this thing can definitely move. Now, the reason why I picked Broadcom over, let's say, a name like NVIDIA is practically Broadcom looks better. I mean, if we look here at the charts, we can see that NVIDIA is simply below the daily 200 simple moving average. It is below the equator. So let's say if we were to describe the 200 simple moving average, above the daily 200 would be bullish. Below the daily 200 is technically a bearish reading. Here, NVIDIA, darling name of the entire world. Everybody and their mother probably has something invested in NVIDIA. But right now, as it sits on the technicals, NVIDIA is not as strong as Broadcom. So that is why I chose Broadcom over NVIDIA. If we look here, the 21 EMA is curling to the upside. We are above the daily 200 simple moving average. MACD is well positioned, and RSI continues to rise. So that is all the reasons why I am in Broadcom and looking for a move higher. Another name that I am keeping an eye on is definitely Tesla. Tesla had a fantastic day on Friday, closing above that daily 200 simple moving average. Let me zoom in a little bit more here so you can see that clearly. RSI continues to rise and hold above 50. MACD is moving higher. The squeeze has expanded outward and more bullishly. Now, we didn't get, the greatest close. We got a little bit of a wick here, but nonetheless, we did close above that daily 200. What I am looking out for here on Tesla is if we can get a break pretty much above 309 would set us up to make a move towards about the 327, 330 mark. But Tesla is shaping out to be one of the main players into the week. If we look here on the hourly, you can see that we got a little bit of a flag, a bull flag setting up here. So that is a bullish signal as well. RSI still looks good. MACD looks good. All in all, can't complain too much. Just needs to make sure if we do get a pullback, can that pullback hold up? Especially if we pull back into the daily 200, can bulls hold it above that daily 200? Of course, there's lots of other names out there. But one of the things that I wanted to bring out, like I said earlier, we also want to look for, maybe some red flags out there, and there's not too much. We can look here on FinViz and see that of all the names within the entire stock market, 58% are above their daily 50 simple moving average. That is looking pretty good considering a few weeks ago there was like 20%, maybe less, below the daily 50. That was above the daily 50. So the market has made substantial strides in improving the market breadth. If we look at the daily 200, there's still plenty of work to do. 35% of names out there are above their 200 simple moving average. So there's definitely a lot of work to do, but market breadth has been improving substantially. If we want to be nitpicky, we can look at names like the bonds. Junk bonds are still struggling to get above their 200. And your question is, why do we look at junk bonds? What is this HYG? Well, simply put, if funds and big money, if they're buying all the junk out there, the low credit rated silly junk bonds, then the market is looking extra frothy, and that is good for market bulls. we haven't quite gotten there. And in fact, if we look at the LQD, which is like your investment grade bonds, your higher grade bonds, look what's happening. They're not buying those up either. So that does have a little bit of concern, but that's something that you want to pay attention to, maybe at the end of the week, each week, just something to keep an eye on. You don't have to have this up on your screens all the time, just something to reference, well, how are the bonds? How are some of these junk bonds doing? How are the investment grade bonds looking? Right now, they're just kind of stalled out. They're not really improving at all. So just want to keep that in mind. But when it comes to the VIX, though, they've been selling the volatility. We had that huge move to the 60s when all this Trump tariff situation began. But look at this. They've been selling it ever since we got to the 60. They've been selling it, and it's moved back down to this 20 mark. Maybe we're setting up for a new daily squeeze, and volatility creeps back in. But that is something that we do want to keep an eye on a day-to-day basis to make sure the market isn't getting more fearful, and we have a extreme downward move like we've seen in the past. So always have VIX up, and if you are a day trader, the VIX should be up somewhere on your screens anyway. But as it sits, the VIX daily, yeah, it is pretty muted. Nothing too alarming here. A little bit of divergence on the 1 hour, but that's yet to be seen. A divergence is divergence until it starts to really ramp up. So it's a red flag, but it's not the end all be all, if you get what I'm trying to say there. Gold continues to be bullish, holding the daily 21, absolutely stellar trend. Nothing is broken just yet. Maybe just kind of turning sideways. We are in a new daily squeeze. That MACD is crossed over to the downside. Now it's just a matter of, is it just getting ready for another move, or is it going to roll over? And if gold rolls over, maybe that's a good thing for equities. We'll keep an eye on it for sure. But as it sits, as far as individual names too, we've gone over Tesla, Visa, Amgen. We can look at a few more here before we wrap things up. Costco continues to look pretty good. If we need to get a break above 1,020, we're looking at about 1,050, maybe even all-time highs at 1,080. Keep an eye on those Walmart earnings. That could have an impact on Costco. Roblox has been an incredible player. It looks like we are setting up for a daily bull flag here as well, something to pay attention to. And also we have Monster Energy. They just reported earnings. Daily squeezes firing up. Looks pretty good. You also got names like General Electric. This is also part of a key player within the Dow Jones as well as the industrials. 52-week high name, pretty strong. In general, needs to get above 215 for a push towards about 220. RSI is getting a little heated, so we'll see if it cools down or if maybe we consolidate some more. It's just a wait and see game, especially to see which way these markets are going to go, especially on the QQQ. It's the battle of the 200 simple moving average. We saw that on Friday, how we couldn't quite get above that. And not to mention this week, we also have our monthly options expirations. So be careful on Friday with OPEX. Other than that, those are my favorite looks here as far as the individual names. Can market bulls get above the 200? If we get above the 200, can we hold it? And then can we set ourselves up for the next leg higher? CPI this week, very important. Powell on Thursday, very important. All in all, let's get ready for another wild week ahead. We are waiting for news as far as the delegation in Switzerland with the beginning of the talks with China to hopefully resolve some of these tariff issues and get a deal done sooner rather than later. Not expecting a deal, just waiting on news on some sort of progress. But all right, that's going to be it for me, guys. I hope you enjoyed it. If you have any questions or need any kind of ticker requests that you want me to personally look at, feel free to drop a comment and I will take a look at it and write back to you as soon as possible. Again, my name's Brian Farr, one of the lead analysts here at Stock Dads. Hope you've enjoyed it. Let's see if the Bulls can get above the daily 200 or if the Bears shove it down the Bulls' throat and we go from there. All right, guys, take care. Have a lovely day. Happy Mother's Day, and I will see you in the next one. Take care.